With this method that I will share with you today, we will never turn the market against you again and will not fall into the trap of false breaks that cost you huge losses. However, you should follow this video with me to the end, as it is important and full of information that will definitely benefit you. Today's clip will focus on an important indicator. This indicator is known as the unbalanced volume, or OBV for short. Today, we will learn the secrets of this indicator and how to use it to confirm trades, market reversals, and more. First, what is the OBV indicator? The OBV indicator is known by two names, the volume-weighted indicator and the liquidity-weighted indicator. The most commonly known indicator is the unbalanced volume OBV indicator. A simple definition of this indicator is that it measures the change in trading volume relative to the change in price. Does this mean it has a relationship with the price? No. This is one of the features of the OBV indicator that makes it lead the market. It does not rely on the price. It relies on the volume, and the volume always precedes the price in trading. What are the features of this indicator in short? The first feature is that it leads the market. Secondly, it can be used for all time frames and markets. Third, it relies on volume, not price. This makes it a leading indicator for the market. Finally, it can detect false breakouts and many other uses. In order to understand this indicator more deeply, we must touch on how this indicator works, because if you understand how this indicator works, you will understand the rest of the section. To understand how the OBV indicator works, we first need to add the OBV indicator and then add the volume indicator so I can explain its function simply. So don't ask me too much in the comments about this trade. I entered this trade in the Nasdaq yesterday using harmonic patterns. I touched on this topic. Now, in this segment, because I'm trying to show you something like the SK system course, but this time it will be specifically about harmonic patterns. If you want a course on harmonic patterns, don't forget to subscribe, like this clip, and write to me in the comments harmonic. First, I want to enter TradingView, the platform I will use for analysis. Click on the indicator box and just type OBV. If your TradingView is in English like mine, or type OBV indicator, it will appear with this label. Click on it and it will be automatically added to the chart. The OBV indicator settings are default. Leave them as they are and don't change anything. If we add the volume indicator to the condition, we notice that the volume indicator consists of a green volume and a red volume. Now, the way the OBV works is that it subtracts the red volume that we see here from the green volume in the market, because for the OBV, this volume represents the liquidity entering the market, which is the green volume, and the liquidity leaving the market, which is it subtracts it, which is the red volume, and thus gives us a cumulative total of volume, which is the OBV chart that we see here in the indicator. Sometimes we notice that the indicator is flat like this. What does this mean? It means that there is insufficient liquidity in the market, or that the closing price of those candles is equal to the opening price. Thus, the OBV constant is observed in this form. As I mentioned, this indicator has many uses, and we will focus on divergence first, then false breakouts. And now we need to be observant and practice on the chart. So look at this example with me. Support and resistance remain important in all markets. In this case, I have a resistance level on the US tech, also known as the Nasdaq. I have a resistance level here, and this is an advantage of the OBV indicator. It can also have support and resistance levels drawn on it. By drawing this resistance, you will notice the manipulation that happened in the market and the false breakout. And if you haven't yet discovered the false breakout, let me show you what the market did. It pretended to break this resistance, while in the OBV indicator I don't see it even approaching this resistance. This means it's market manipulation and a false breakout. Therefore, I would never join the ranks of traders who buy at this point and wait for another opportunity or a sell trade. So the indicator shows the peak that was before with this peak, meaning a lower peak than the previous one. This means the market will reverse, and that's what happened. The market reversed. Watch the break of the 200 line, which is considered a moving support level with the market, from which the market makes many rebounds, like what happened here and what happened in many areas. This is another example of divergence. I stated it in the RSI section. Because divergence is stronger because it relies on volume and precedes the market. Watch with me here. The market is telling us a different story, that it will be bearish, but the OBV indicator tells us the truth. The market will not be bearish, on the contrary, it will rise. Confirmation that the market helped is the break of this resistance, which was temporary. And you saw the market sharply rise above the 200 line. I think you've now learned the importance of this indicator in the market. I'll leave you now to practice. If you found this helpful, don't forget to hit the like button.